As a start, some ideas on the outlook. It's more a general view about Europe and a little bit on the addition to some kind of focus on the Nordics at points where I think it makes sense and where the general view might require some detail on it. Looking at the main driver of the markets, and that was it's told already several times, and we are living in a QE world, and the question is how many QE we will see in Europe going forward. Interest rates, we've learned a lot in the last 4 or 5 years that there's no zero lower bound to interest rates. We've figured out that they can get negative. We just have to figure out how negative can they be. Will the ECB lower the interest rates? Will the Riksbank lower the interest rates further? So we're just learning that there is a new territory to be conquered that heavily influences the position of real estate as an investment class, because it's one of the assets that yields relatively interesting returns. But what we also have to keep in mind, looking at all the ECB activity of QE, we are actually simply going back to a balance sheet level of the ECB that we had shortly after the financial crisis. So we had a restrictive ECB for a couple of years, and now with quantitative easing, it's simply bringing back their balance sheet to a level we had after the financial crisis. Therefore, the ECB is completely differently working like the Fed or the Bank of England. Therefore, I think we will also have to accept that despite all QE happening in Europe and the Eurozone especially, it will take a while before we really see something happening, because we are simply heading back to levels we had in 2011, 2012 right now. The other thing is, yes, Europe returned to growth, but it's nothing that really required that it's something to applaud for. There's not a broad-based real upswing coming in the Eurozone right now. It's more about locations, about the property itself. So the story is not about cyclical market upturns, it's more about what do the assets require, what is the location, what are the cities we are investing in. Because from the overall economy, yes, we see stabilization, we see demand increasing, but there's still a lot of slack also in the office markets there that can accommodate a lot of the additional demand coming through. Trying to give a little bit of a perspective on the Nordics, given the overall Eurozone picture, I think despite Finland, which had some structural issues giving Nokia, but going forward I think might nevertheless be a very interesting market to watch. The overall growth picture in the Nordics is quite positive. They are much better positioned than many of the Eurozone countries, so that this is also one of the points why investor interest in the Nordic has increased over the last years. It's not only the local players that heavily scan the market, it's also the international ones, not only from Europe but also from outside Europe, that increasingly try to understand what the Nordic markets offer to them, and what that also I think will be one of the themes going forward. Looking at yield levels, there is this talk about we are all times low. Mean reverting world, is it not? If you look at the overnight interest rate, you see quite heavily that we have a downward trend in the overnight interest rate. So the question now is, translating this to yields. So if we have reached record low levels for office yields, for instance, Stockholm below 4%, and also some other European markets, if you look at London, we have seen offices trading on below 3% yield in the West End already. So the question now is how further can they go down? And when will the turning point really take place? And I think given that the not very dynamic economic environment we are currently operating in, we can be quite sure there will be another 2 to 3 years before we see any kind of substantial turn in this story. Nevertheless, I think the speed at which we have seen yields decreasing over the last 3-4 years will definitely slow down, because we have reached now levels not only for the investor that make it quite challenging, but also from the financial side. It's increasingly the underwriting, it's getting critical given the price levels we have seen in many European markets now. One of the main drivers, and I think that is the story going forward for the real estate industry overall, is we think urbanization is one of the main trends that drives the markets. But I think it's something that we have to really look at the details behind the headline numbers. And if I mean urbanization, and that is the other thing, is it's not about absolute urbanization we have to look at, it's also about the relative part of urbanization we should look at. And I've tried to picture that out on the right-hand side. If we believe in the Nordics, yes, the cities might be smaller than Paris, London, and some other of the secondary cities in Germany. But if you look at the top 4 cities in each of the Nordic countries, they account for roughly a quarter of the overall country population. And that's not referring to the urban area, that's strictly referring to the administrative boundaries of the cities. So I think they might be relatively small compared to Europe when you look at the absolute size. But looking at the Nordics itself, cities like Uppsala, Bergen, Aarhus, they are quite important cities for the respective countries. So if you believe in the Nordic countries, you have to really look at some of the secondary cities, and that is, I think, a trend we will also see when we look at what's happening next year, that more investors try to understand and possibly also try to get outside of the major cities, because pricing in a lot of these major cities is quite aggressive already. Search for product continues. That is the main trend. I think despite all the talk about the investors get they do like to incur more risk, they're going for more value add investments. I think they go for value add because they need the higher returns, not because they want to have the higher risk. So I think the story from the investor side is still more, we want to have a core property with a value add return. So that's something, it's a little bit like squaring a cycle, and I think that is the main story for a lot of the investors going forward. What can they really think of, and what can they acquire from the asset side? So also from the investor side, asset management, sourcing, and understanding what's on the ground is one of the main stories to really help all the institutional investors to really get the returns they want to see. Investment volumes are heavily driven, and also the Nordics are one of the markets to look at. Norway and Sweden being the major markets this year, given also some of the larger portfolio transaction. I think I mentioned Finland already. Given the economic situation, a lot of investors currently don't target Finland so heavily. From a purely economic point of view, I think that might also be an opportunity going forward, because I'm quite sure that the innovative capacity of Finland will lead to a situation that Finland might be able to really get itself out of the economic situation going forward. What is the picture for the next coming 5 years? We will see further yield shift in the office sector. Interestingly enough, this prime yield shift is not driven by any substantial prime rental growth, so it's more or less the investors price in the security of the location, they price in the security of the assets. Rental growth it's occurring in countries, for instance, like Ireland and Spain. That's more a structural type of rental growth. On the other end, you see the markets, especially Poland, where you have a lot of building in Warsaw currently going on. Therefore, rental growth over the next 5 years it's very limited. Nevertheless, you still see some slight yield compression due to the search for product and search for cash flow from investors. Looking at the retail space, the situation is a little different. Their rental growth is some part of a driver for the yield compression we see going forward. It has to do with the fact that looking at the high streets across Europe, there is a competition for space from the retailers. They want to have the space in the top locations, and increasingly the international retailers don't want to compromise on location anymore. They want the top location, and that's what they're also willing to pay for at the end. So despite all this talk about the e-commerce and how it will influence the retail market, if you look at the high streets, that will definitely be one of the markets that will be targeted from retailers as it has been in the past, and that will drive rents going forward. Looking at the Nordic office market, finally, what you see here is you have stability in the Nordics over the past years, but it's also heavily priced in. If you look at the yield levels, meaning Stockholm, you've seen in Oslo a tremendous yield shift over the last, let's say, 6 to 12 months occurring. Finland might be, as I mentioned, a little bit of the outsider in the current situation, but if you have understanding of the market, that might be also one of the opportunities that can be seen in the Nordic markets, where pricing possibly offers some way to go forward. Residential is one of the things, when you look at the Nordics, there is traditionally been heavily investments in countries like Sweden and Finland, and also Denmark. Norway is a little bit of an outsider also due to the high owner occupancy rate. Interestingly enough, urbanization should be a main driver for the residential markets. It's a main demand driver, but it's not the main rental driver. And we've tried to figure that out in the first step when we looked at it, and we realized population growth is not influencing rental growth in the resi market. We were surprised, but later we realized we have regulation as a main driver in the residential markets. We have rent regulation, we have regulations how to set rents in a lot of markets, and that hinders actually that all these population pressure can transfer to any type of substantial rental growth. And looking at the Nordics, for instance, if you look at some of the markets over here, Stockholm might be an example, you pay nearly the same rent for standardized apartments in the city center and the outskirts. That's simply due to the regulation. There might be some other factors that trying to extract a little bit of the purchasing power of the tenants, but by law, the regulation itself hinders that the demand pressure translates to rents. And that also means for investors that are operating in these markets, they have to understand what's going on the regulatory side, because that is one of the main challenges if you operate in the resi market, to understand how you really can extract value from the ongoing urbanization that we see across Europe. From that side, thanks very much.